Happy Friday. Hope you're well and doing great. You might be wondering, how is it possible we still have bears lurking in the background? What possibly on earth could we be but bearish about? President Z confirming that he's going to meet with President Trump for security concerns. Interesting framing of the negotiation, the summit that they're headed to next Friday. I thought I heard Thursday. Trump said yesterday that he's meeting on Thursday. I don't know, maybe they're going out for dinner or something like that. Maybe they're going to catch a movie. Big deal Wednesday, just mentioned or by Dog and Nation, is we got the behemoths, Microsoft, Meta, Google, probably announcing more layoffs, but probably not letting up as far as the spending here during the great AI wars, the great AI race. That is probably going to continue, but nevertheless, it is a really important signpost for us to watch out for. We have to see if everything passes through all right, and that brings us to the next point of contention, which will be the summit. And then after that, we enter what are, assuming that we get through both of those events unscathed, we are entering into what is a the most favorable portion of the year, seasonality wise. However, we also have, and I forgot to mention, Wednesday, the 29th, is also the FOMC day. And today's inflation print gave them the go ahead. I mean, it was a short either which way. Nevertheless, we see that we are expected to have not only a cut here on Wednesday, the 29th, but also 5 weeks later, 6 weeks later, you could see that the probabilities after today's inflation print kind of went more towards favoring even, not just 225 basis point cuts into the end of the year, possibly 75. I don't know about any of that. We have to see what Powell has to say about the situation. Nevertheless, we do have a dovish Fed, and that dovish Fed is likely going to be leaning more dovish. The one outlier we had as far as if this mid-cycle was able to continue and move towards re-acceleration. We did see over here the manufacturing and services PMIs both point towards acceleration. Good signs. Listen, there's cracks and there's concerns everywhere, and they seem to be getting bigger. So it's not without. This is not like, nothing is easy. Just leave it at that. But definitely signs, and I think my case remains that outside of one of these event triggers that we're watching, that likely some point going forward, the narrative becomes re-acceleration because they will be running it hot. One of the things that are going to help run it hot, in my opinion, again, I still have the bears lurking. We are looking into, we could have a tweet come out at any moment, right? Or a truth social at any, what does he call it? A truth at any moment. And it could shake and rock the markets. This is relevant. Renaissance Technology, the best performing hedge fund in history. It's so well performing that the 20 billion under management is their own funds. They they raised money, they had immense returns, best before, I don't know, it's something like 74% year over year. And in the last 10 days, they've lost 15% of their overall portfolio. That's a big loss on 20 billion, and sending them negative for the year. S&P 500 is up 12%, but that's the thing is that the dynamic that we're currently living in, whereas, the president is out on his, phone, and it is such an anomalies within the market, that even the greatest quant fund of all time is really having a very hard time, and that's relevant. I could pull up a chart of the Nasdaq in a second. You're familiar with those moves. Last Friday we had one of them. All of a sudden, boom. CPI is irrelevant. Is it irrelevant right now? It's still high. People are saying, well, it came in below expectations, but it's at 3%. It's very, very high. Here we got and some worries and concerns. Let's talk about that, and then we'll move backwards towards the balance sheet. And we could start over here with something like, true inflation we've seen since June. We're looking at, oh, I don't have a pointer. Let's go ahead and get this up and running here. Man, I haven't had such problems with my machine. It's a relatively new machine. It's a studio running M4 chips, and like every 10 days, it just won't come out of sleep. Anyway, problems, right? Um, we could see that we've been. If I was doing TA on the inflation over here, I would say this resistance here. It looks like it's getting ready to break to the upside. Jordan, you're saying shelter into 2026 is likely going to give this cover. Yeah, but that housing market is a very, very slow moving beast. No question about that. And what is or what could cause this to trigger upwards? By the way, 3% inflation is ridiculously high, especially for the Fed to be moving towards easing, towards cutting rates. Remember, they've kept monetary policy restrictive. It didn't matter because of fiscal dominance, like trumping, no pun intended, trumping the monetary policy of the Fed. However, it's still at 3%, and they're moving towards easing. And if they are able to reaccelerate and run this thing hot into 2026, inflation's going to start stoking up. And one of the causes for that, one of the things that could actually cause, a problem over here, and it's, by the way, I have this chart of natural gas, and this is like a triple levered, I believe, a triple levered. Pro shares, and it's like this chart was designed to go down forever, starting over here at 3 million down to what happens when it goes to zero. Is it going to zero, or are we about to look at some of these bounces that have occurred? 35, that's a 3x happening within a few months. Is natural gas, I don't have a comment on this, well, that looks like it's kind of setting up. Is natural gas getting ready to find flavor? It's probably one thing the U.S. has going for it as far as this whole AI race is its excessive natural gas. I'm actually want to do some research myself and figure out if any of these data centers are using natural gas, what that looks like, yada yada yada. But that was just a side tangent over here. And oil, $62 a barrel. Everyone is hating on oil. I wonder if this were to break out, right? Breakout would be, well, I don't know what a breakout would look like. Let's just go ahead and just try to get our bearings over here. And we have like what would be a black diamond over here. I see it's not clear at all. So I go from the outermost. See, it's just not clear. It peaked above over there. There's nothing clear about this for me, but if we're breaking above 72 over here, all of a sudden, oil is going to be pricing in higher inflation. It's going to put a lot of pressure on inflation. Is that possible? Or recession 2026? Or are we about to fall off a cliff? I don't know. Again, my concern, my worry is I think that we're going to be able to move towards a period of reacceleration. And then as we're moving towards that reacceleration, oil rising, inflation rising becomes a problem. That's definitely what I'm worried for. There was one chart over here I wanted to show. Look at this. I heard that going back to, I'm just making up a date, I don't think it's wrong, 1998, it was 77 ounces, 1 ounce of gold, 1 ounce of gold bought 7 barrels of oil. 1 ounce of gold purchased 7 barrels of oil. Today, 1 ounce of gold purchased 77 barrels of oil. Are we going to see a strong snap? Gold, my expectations, a lot of people calling for, like, some people are calling that the secular bull market is over. Gold has peaked. I think that we're entering a period of consolidation. We try to check that out. Maybe February, March, April, we're able to make that resumption up, that would be neat if that's happening. We will be tracking that well into the new year as we get closer to when our expectations of any type of resumption could take place, as well as we'll be looking at any potential accumulation points. But right now, we got to let that thing breathe and cool off a little bit if it's going to cool off, right? I also want to do more research because I don't hear enough people talk about it. I know D Power brought it up recently, but we have to talk about, you know, and I need to do some research because I don't hear anything about it. What Tether's accumulation of gold looks like. Did you guys hear that statistic? Tether's on pace to make $15 billion. I don't know, is that a quarter? In one quarter with 99% margins. Unbelievable. They're buying gold. They're on the bid. I have to check that out. Anyway, that is something that I think that could be a concern. If we see higher oil prices into 2026, that's going to see inflation rising. And again, the only thing that's going to cause that the slow motion, I say like housing, shelter coming off, rents are coming down, especially in certain regions and areas. Housing likely, if mortgage rates come down and activity is able to pick up, we'll see in a buyer's market prices coming down. It's a very slow moving process. But what happens if the Fed is caused to move towards outright printing? By the way, the Fed, and probably Wednesday, we see the end of QT. Probably Powell announces the end of QT. And then the most curious thing is what happens to the Fed's balance sheet after they stop QT? Are we going to see it rising just like we did back here in 2000, right here, Fed ends QT, organic balance sheet expansion, right? It's just QE, not QE by another name. It's still highly accommodative. Risk loved it. Our expectation of the Fed cycle is that, and it's again, one thing is for sure. One thing we got right, one thing that is hard to get right, right? I always say that the Fed's goal is to extend the cycle as long as possible. At the same time, we're going to have quicker and sharper cycles. Birth of QE 2008, they were able to extend it as far as 2020, 12 years, right? 2020 is going to be 2032 before it's likely going to be a lot. In my view, they're going to have to inflate that system. Something's going to happen, and they're going to need to go return to outright QE, but they're trying to put that off as long as possible. My view is the next stage of the Fed cycle is actually to stop QT, and then they see that balance sheet expand. Does it pause? Right? What do we have to? We have to watch the rate of increase. If it does begin increasing, if they return to balance sheet expansion, and Powell tries to tell you it's just organic, we have to look at, and the only thing we have to compare it to is this period over here. But we have to watch the pace at which it is rising, and maybe it's slow. They were able to, by the way, run off the balance sheet for a lot longer and a lot more than I expected. Now, it's still significantly higher from when first of all, from the last time they ran QT, balance sheet is almost double from where it is today. And then organic balance sheet, the one-off, they got it down, a decent amount, but number go up. The balance sheet goes up. The devaluation continues. I'm serious. I want to know: are they going to be powering these data centers in the U.S. with natural gas? I don't know. 3% is the new 2%, and if they get it down to 2% at some point into the future, it's going to be brief. Any event that causes inflation to go down towards 2% is going to have to be the cause of, at the same time, the Fed to have to return to the printer, to outright balance sheet expansion through QE, massive one up. it's going to be ugly. It's going to happen, unfortunately. And then like what do some people call it, like the big print? It'll just be the bigger print than the last print until the next bigger print. That's all that's happening over here. And that's why we Bitcoin. That's why we talk about the debasement of the currency being the biggest bullish case for Bitcoin. Now, dependent on adoption continues. Speaking of adoption, the question came up, Jordan, what like this tweet that you put out there recently, talking about the Genius Plan being the groundwork is being laid for the Genius Plan, the Genius Bill, right? The Genius Plan, the Genius Bill, an infrastructure of stablecoins backed by U.S. Treasuries and by extension U.S. debt and future economic growth. To expand the stablecoin market, this is what's in contention. Bitcoin will need to move significantly higher. They are going to send Bitcoin. Here you can see actually the correlation between the two. And as the price of Bitcoin rises, so does the stablecoin market and supply. And as the price of Bitcoin contracts, so does the stablecoin market as well. Let's go lean into actually chat GBT here and just get a further explanation. I tried highlighting the relevant points, but then when I scroll down, the highlights didn't scroll with it. So I'll just go with you, right? So by the way, the question here we're expanding on, my assumption has always been that stablecoin market is entirely independent of the Bitcoin market cap. Maybe I'm missing something. Soccer Kid, let's take a look at that together. And like I don't even know what to call ChatGPT. We'll call it GBT is saying, you're correct in theory that the stablecoin market and Bitcoin's market cap are independent. But in practice, they become tightly interlinked through liquidity, collateral, and market structure. Let's take a look at that. And we can see that a higher Bitcoin price increases the total value of crypto collateral across exchanges, right? All protocols, DeFi, centralized exchanges. That in turn supports a larger base of stablecoin liquidity, because more Bitcoin collateral can be posted to borrow or mint stablecoins in decentralized systems like DAI or never. Is that even I don't even know, or newer Bitcoin-backed stablecoins, as well as people borrowing against Bitcoin for accessing through loans. If Bitcoin's value is low, leverage capacity and liquidity dry up, and stable demand contracts. Maybe I can get rid of that. Maybe I can't. Stablecoins need a growing risk-on crypto base. When Bitcoin rises, it attracts new capital inflows. It's when Tether prints more money. Trading volumes surge, more stablecoins are issued to meet that demand. When Bitcoin is stagnant or declines, traders redeem those stablecoins and supply shrinks. Historically, every major expansion of stablecoin market has coincided with a bull run in Bitcoin. Treasury-backed stablecoins tie crypto to the U.S. debt expansion. The next generation of Genius Act-style stablecoins will be backed by U.S. Treasuries. For those to scale, there must be sufficient demand from global capital markets seeking dollar exposure via crypto rails. That demand is heavily influenced by confidence in returns in both Bitcoin and digital assets. A booming Bitcoin ecosystem justifies the infrastructure and investor appetite to absorb $1 trillion in tokenized debt. Or in other words, if Bitcoin is booming, the stablecoin market is growing, and that provides the bid into U.S. Treasuries. That's the plan, right? As Bitcoin goes up, more collateral value, more trading and borrowing, more stablecoin issuance, more liquidity and capital inflows, and then Bitcoin goes up again. I guess this is an appropriate time to just take a look at this. Think of Bitcoin. This is great. The tie up here is great. The summary. Think of Bitcoin as the reserve asset and stablecoins as the credit layer. Like gold and the euro dollars in the 20th century, to grow global dollar liquidity, the reserve base right? Bitcoin had to revalue, back then gold had to revalue higher over time. The same dynamic now may be unfolding digitally. The world can't expend on-chain US dollar liquidity indefinitely unless the base collateral, Bitcoin, reprices upward to support it. There we are, Soccer Kid. Great, 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 great question. Yeah, I think I outside of an adoption event, this is not happening, right? I don't even know, was that really his prediction, or did he say that like it's just eventually going to 444,000? If it's by the end of the year, unless by November, unless the United States is like, or Z and Trump are like, listen, forget the BRICS, forget this whole gold thing. We're just all going to embrace Bitcoin. Yeah, Bitcoin is the rising tide that lifts all boats, no doubt. Fed cycle. Let's tie this up over here. Whether or not by the end of the year, right? Whether or not it's next Wednesday or December 10th, it appears and it looks like that the Fed is signaling they're getting ready to stop QT. It's been to a trickle as it is right now. The important piece is once they stop it, what's going to happen, and are we going to see that balance sheet rise? If the balance sheet begins rising, QE, not QE, last time that happened, this was a tremendously explosive for risk. I imagine that's what's going to happen again. We're going to be tracking that. We're going to be watching it to see. NASDAQ here printing new all-time highs. Jordan's got bears in the back. Either which way, here we go. And I think there was just one other. This is cool follow-up to the chart that we look at. And this is an extension all the way out until the peak in 2000 over here. And I wonder what that equals as far as the NASDAQ in today's terms. Nevertheless, something. I don't even know where I wanted to take that. So let's just go over and take a look at our positionings we have so far right now, as the NASDAQ here is looking to close at or near the highs outside of some type of, rug pull today. We're looking at NVIDIA and both FNGU getting ready to enter back into the market. Everything else on stocks is sidelined. We're looking at Cardano still holding the open short when it comes to Bitcoin and crypto. The only open position we've gone very quickly from, for not on Bitcoin and crypto, but stocks. We went from 100% cash briefly to 90% like positioned, now back towards 0% into cash and moving very quickly. Cardano here getting close, potentially here, getting closer to exiting this position, but right now still holding open position. Well, he did make a prediction about 444,000. I'm just confused about the time frame, whether he said it was into the end of the year or if he just said that it's eventually going there. But it doesn't really even matter, to be honest. It doesn't matter. And yes, Bitcoin is more likely than not. It's not like 444,000. Like, no, it's likely going to, first 100,000, then 200,000, 500,000, a million, not stopping there, but whatever. That's all good. He said both. Got to cover your bases. Let's take a look at what is going on over here with gold. Yes. Compared to the candles we've seen, but still some pretty big ranges. Volatility still expanding over here. Gold flat on the day. Interesting. Wait, Cabby, I want to understand your question. I don't really understand your question yet. how to look at market cap multiples as part of the bull bear case for stocks. So are you talking about like price to earning? Um, an interesting example is that recently they had this currency crisis in Lebanon. Actually, so we used to have I forget the name, someone back here 2020 2021 that is no longer with us ever since the crisis actually in Lebanon. But you know, ahead of the massive devaluation of the currency, like direct messaged me and told me they're about to devalue the currency. So it was quite interesting. I remember before Lehman went down, a friend telling me Lehman's going down within the next couple of weeks. Sometimes people know. And point being here is that like um and again, I think the reason value investors over the last 20 years have performed so poorly is simply because the devaluation of the currency since QE has accelerated. It does distort things. If you could imagine the stock market in Lebanon during this currency crisis, something that was trading at like um, I'm giving the wrong fact. It's obviously you all know. Like I don't consider it. So I'm afraid to say something that is completely erroneous. Because it's not PE, right? Well, let's say the whole Lebanese index is trading at a PE of 7. During the collapse of the currency, it was trading at 67, right? So, you know, I don't I don't really well, I don't factor a cabbie at all into any of my analysis. I lean into momentum. I lean into TA, and that will keep us out on the right side. If people were to use like rational minds, like not like the people that have used rational minds, they're the ones who have basically been left behind throughout all of this. So it's just not the way I view it. Awesome. I'm so glad that this is the first time that you're catching CTM. Definitely subscribe. Definitely subscribe here, and we'll keep going. Listen, we're going to keep this one really short, really sweet until Monday. Next week's a big weekend. I can't wait to see how this resolves. I can't wait to Wednesday, not only to see what Powell does, have to see what happens after the close when it comes to the earnings. It's a mega day. And then after that, we get to look forward to all of the politics and to the summit. For now, we're just going to keep it light and that's it. Have a beautiful weekend, everyone. Lots of love. God bless you. See you all back now on the inside and through the weekend.